And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, 30th of March. Hi, Phil. How are we doing?
Very good. Thank you very much, Andrew. And we've finally got some sunshine outside, which is nice.
No, it's about to all change. I think you'll find it's going to be a pretty ghastly next couple of days. But then next week it should be a lot better, which is fine because I'll be down in Cornwall.
Hurrah.
A long Easter break. It's what we all need. This market is getting very, very tricky. And the whole world is just getting very, very tricky. In fact, it's got nothing to do with tech and transitional energy particularly. But do you remember the game Risk, Phil?
Yes, I do.
I mean, I used to love playing Risk. And if you think about the world at the moment as a risk board, all right, you've got China and Russia have got that huge landmass. They've got that all captured. And they're basically, there's potentially the West, as we'll call it, is trying to defend on the western flank Ukraine. It's trying to defend on the eastern front Taiwan and potentially South Korea, because you could see if China's very clever, it lets the Russians attack Ukraine, it lets North Korea attack South Korea, and it attacks Taiwan. You know, in the game of Risk, you don't want to try and defend three attacks at the same time. And that's where the West's sort of heading at the moment, which really worries me.
Oh my God, I know. It's a bit of a thought for the day, Andrew. But yeah, it has that potential, doesn't it?
All listeners, get out your Risk board and give it a go. You'll find it's very difficult to defend on three fronts. In Risk, you want to just be playing on one front most of the time. Anyway, let's move to tech and transitional energy, where, well, actually, probably the news that's just, of course, broken is the UK government have produced a new sort of transitional energy and renewable energy carbon neutral report, 1,000 pages long. It's a rehash basically of everything they've said before. It says basically absolutely nothing, but that's governments for you. They are a complete and utter waste of time. All they do is basically get themselves ready for the next election. They have no interest in how the country is run. They're not business people at all. It's just a complete nonsense. This is where the Western world has just got it so bloody wrong at the moment. Do you think I'm in a good mood or a bad mood, Phil?
You're in a bad mood. I tell you what, I would advise you to look at AI for some answers to all of this, Andrew. However,
well, Chat GPT, what is the answer to all of this? I dread to think what it would tell us.
Exactly. This is if you could. Move on to some news.
The trouble is, going back to that report, I don't know if you saw it, actually says the government wants to put 200 million into short-term and long-term energy storage through the UK Investment Bank. So I've had a couple of people ring me up, sure, isn't this good news? Isn't this good news? I go, no, the UK Investment Bank is absolutely useless. It doesn't do, the sort of things that we'd want it to do. It will just put money into projects. So it can get a nice sort of infrastructure return of 7%. They may as well just put it in the bloody bank. I mean, nowadays you can get 4% in the bank, can't you? I mean, the whole way we invest money nowadays is just so wrong. I don't know where this world is going. Oh, get me off it. Actually, I'll tell you what, let's talk about some good news on a company. Actually, something did make me smile this morning.
Go on.
Can we talk about this one? I've owned it, and I always wonder, why do I own this but never sell it? And it's actually probably been one of my best performing stocks in my portfolio, is SSE.
Oh, okay. Well, go on, Andrew.
Did you not look at that this morning, Phil?
No, because I was looking at other tech news. Andrew, man.
Put you out right at the beginning. Unbelievable.
So I've got warning those to go through. Come on.
I love it. Well, tell you what, it did make me smile, and I'll cover for you, all right?
Thank you.
It obviously is in the FTSE 100. It's a very big company, actually, and it is obviously our largest renewable energy company. Has huge wind farms and things like that. It has sold off all of its retail bits, so you cannot blame them when you get your electricity bill. But their announcement this morning was that it was above expectations. We love that word, don't we? It is updating its expectations for the full year to adjusted earnings per share to more than 160p, whereas the forecast before was 150p. And it's also said that it's a dividend, which is a huge dividend payment. They intend to carry on for the long term, increasing it by 5% every year. This actually, in my view, is a stock that is just so ideally suited to every sort of pension fund or whatever. simply on the grounds that you've got a really nice dividend yield. I'm just quickly telling you what my screens are saying here, 5%, but growing by 5% every year. The PE isn't cheap, but it's all renewable energy, it's all wind farms, it's just a great utility stock. So you just sort of sit on it and it'll give you sort of a 5% yield, hopefully, and a 5% capital gain every year, year in, year out. That'll do me fine. What's to complain about that? And it's footsie, it's liquid, it's easy, it's I love companies like that.
Well, we just need more of them. 20 billion market cap, and up 3% today. Well done, well done you.
Well, I've always said actually, someone like Shell should just take it over, or BP. I mean, if you wanted to ever turn yourself from being a carbon company into a renewable energy company, that is the way to do it.
Yeah. Wow.
Anyway, there you go. That's the bit that did make me smile this morning.
Well,
what's been making you smile, Phil?
Well, I'll tell you what.
Actually, no. What in tech and transitional energy has been making you smile? Just get that correct.
Right. Okay. Well, look, I thought this was food for thought because I've never seen this in my whole career. And this was news that 1,000 AI experts, researchers, investors, Elon Musk, Amazon, DeepMind, Google, Meta, Microsoft have all called for a pause in developments of AI and a think about the capabilities and dangers of such systems. I have never seen that. So a evolving technology where this is being called for. That was very interesting.
I did read it, and I must say I read it, and I thought you've got to be joking. How can you stop technology?
No, I know. I've never seen it because it's never happened. And how the hell do you do that? How do you stop people in laboratories developing things?
I mean, did they say with social media, hang on a second, this could actually change the way we live and could have serious consequences for children and things like that, and so we better stop social media? No, it just came thundering down like a train, and you can't stop technology. It's impossible. And AI in particular has now got a head of steam that you've got to just run with it. And it's probably the people who are saying that should stop it are probably the people who are a bit behind the curve and aren't ready for it. And they just want time to catch up. You can't stop it. And in general, look, in my own view, I think technology, every time you have a leap in technology, in general, things improve for everybody. Same way, every time you have a leap down in your energy costs and your energy capability, the world basically improves for everybody. If you think about it, as we went from the Iron Age to the sort of industrial age to the oil age, now we're going to the transition energy age. Each time you do these major steps, the world becomes basically a better place. And I think we've obviously got the transitional energy. Now the world will become better. Our energy costs are fundamentally, although it doesn't feel like it's short term, are fundamentally going down because the marginal cost of solar is zero. And I think with things like AI, robotics, and all this sort of thing, it's got to, first of all, it should reduce cost, but it should improve the quality of life in general. So don't stop it. Let it go. Yes, there'll be issues, but you have to let these issues iron themselves out.
Well, yeah. I mean, I remember, old enough to remember when, silicon chips became a commercial prospect and, were going to be more widely used. And the fear at the time of millions of job losses and, oh my God, what it could all lead to. And yet, what a change to quality of life has been brought by semiconductors. So I'm with you on this. And exactly, and how on earth can you stop it? They'll be pushed to do that. But that was very interesting news to see. My word. So yeah, so that didn't quite say it made you smile, Andrew, but certainly caught my eye.
Well, all right, it's caught your eye. Come on, did anything make you smile?
There's no company results, but nothing greatly entertaining. Hey, tell you what though, I've just seen out results from BYD, in China's biggest EV manufacturer, and they're reporting. So I don't know if you've been looking at the news on China, but subsidies have been coming off on electric vehicles. But BYD reporting record sales into the first quarter of this year. Also, Geely reporting record sales for last year. but saying, and just looking at the car market as a whole, because this affects all sorts of things in the automotive market, in terms of demand. So in 2022, there were 5.9 million new plug-in electric vehicles registered in China. BYD had 40% market share of those, and the whole car market last year was roughly 79 million vehicles. But there's a lot of pressure on the auto markets. Firstly, they had all the component shortages, which have been clearing through, but now you've got rising interest, rising inflation, making it more difficult for consumers to buy, and also higher interest rates because lots of cars are bought and financed. So some pressure on the market. But it was interesting to see how they were, BYD have been accommodating that, and also we've seen a bit of a price battle breaking out in EVs as well. So then we've got to, this is something we've got to follow the dynamics of very closely because, as I say, it impacts everything: mining, semiconductor tech, all sorts of tech involved in the auto industry.
Yeah, look, I think there's actually a huge change that we just haven't even started to see yet to come in the EV world, and that is at the moment you go and look at an EV and it's basically the same price as an ICE car, and so you sort of think, well, what's the point? The reality is the cost of building an EV is significantly less than that of a combustion engine car. And in China, actually, now you can quite easily get hold of EVs for equivalent of about £5,000 only. And I think what we will see, but we're just not there yet, is a price war breakout. It could well be because the Chinese start somehow importing them into the West in a much more aggressive manner and selling them at prices significantly below the Western car manufacturers. And you may say, well, I want a Tesla for 50,000, but actually, if I can go and buy a BYD, which by the way stands for Build Your Dreams, if you don't know it, what a great name. But you can go and buy a BYD for £5,000. Okay, maybe it's not quite as good, but with an EV, the engine is sort of to a certain extent the same, whatever it is. I mean, that's over exaggerating, but I think price is going to become a key part of it because that's the sort of world we live in at the moment. So would be my next step in where EVs go, is I think you are going to see a huge price war and a lot of very cheap EVs built mainly from China flooding the market, and that could change the way we perceive EVs in general. And it's a big threat to Tesla, actually, although Tesla has clearly got itself into a major sort of pole position in the West for EVs. But anyway, that's my view.
Yeah, well, we'll keep our listeners informed of what goes on in that market. And I remember, I don't know if you remember, was in the 80s, but I remember, Japan used to have pretty strict import controls on a lot of Western vehicles, so it favored Japanese car makers. It's just one of those markets where, governments can get involved as well because there's so much in terms of GDP related to automotive. Yeah, so I'll watch that. So tech news, Andrew. We've had a few results coming out this week.
Yeah, we have. Keep going.
Sorry.
I'm letting you kick off. As you know, I'm pretty busy running around doing a lot of things at the moment, and so I haven't necessarily got a list sitting in front of me, which I know you do. I just catch you out. Come on, kick off.
Right, I thought you'd run out on me there. Thank goodness you haven't, Andrew. Right, so we had full year results from a company called Big Technologies. The ticker is BIGB, 700 million market cap. This company has 67 million in cash. We'll just point that out. Big Technologies. This is tracking tech. And originally Sarah Murray, who founded the company in 2005, wanted to create a GPS device small enough for a child to carry. Presumably to track a child's whereabouts. But anyway, so Sarah Murray, she's developed this business, and it is person tracking technology. And of course, one of the bigger users of that sort of tech is for monitoring criminals, and used by departments of corrections. And so they company reported double-digit organic revenue for the full year of 33% to £50 million. Strong second half, and said that it reflected contributions of new customer wins, including a significant national monitoring contract in New Zealand that is fully operational. So also revenue growth from Asia Pacific and the Americas, which grew by 60% and 11% respectively. So this company's undergoing strong growth, but what is particularly interesting is the margins in the business. Gross margins just went up from 71% to 72.5%, but an operating profit under 20.6 million on turnover of 50.2 million and generated cash from operations of 25.7 million pounds. So a strongly performing high margin business. However, this is reflected a bit in the price. So it's trading on a 11 times EV revenue and EV EBIT of 29 times. Nonetheless, looks a very high quality growth business.
I remember when it floated in the middle of obviously the pandemic when valuations were, should we say, a little bit crazy. I think it was it about £3 it floated at? Yeah. And then it shot off to a big premium on day one, or maybe it was floated even less than that. And I know it peaked at about 360, I think. But I remember a fund manager saying it was, is it Sarah or Sarah Murray? I never know quite which.
Yeah, Sarah, I think it is.
Sarah Murray. She still owns 25% of the company, I think. But I remember a fund manager saying it was the most impressive CEO he had ever met in his life, and he was piling in. He still does own a percentage of the company. I'm not sure if he's kept all of the stock that he took at the IPO. Obviously, then the pandemic finished. All these tech stocks came off, so it came off quite sharply. In fact, it fell down below 200p, almost halved actually. But since then, it is slowly clawing its way back up. And if she is that impressive, she probably still is that impressive, even though it's 2 years later. So obviously, one, I think, as you say, it's highly rated, but probably a pretty damn interesting company.
Yeah, and there's also I hate to say it, there's a structural growth driver, isn't there, to it? Like, with growing crime, prison populations growing and very expensive to maintain, and this is one way of managing offenders. So yeah, so there we go. So so a couple more interesting ones I spotted was Softcat, which is SCT, 2.4 billion market cap, and this is Softcat is all about IT solutions and supports IT services. So primarily cloud services and cyber, and they've got solutions in terms of virtual desktops, apps, supply chain operations, software licensing, secure IT asset management, etc., all the stuff that businesses need in terms of IT. And as we know, during the pandemic, the sector experienced a lot of strong demand, but particularly for stuff like for working from home and computer hardware. And Softcat had their interims to January end, and their revenue was down by 11% from 577.8 million to 512.4. But most of that was from they had a very big one-off hardware contract in the prior period. But what they said was that their software and services income rose by 24.5% and services 31.5%, which offset that decline in hardware. And also notably, even though it was that hardware contract was a one-off comparable, the operating profit just slipped from 64.1 million to 63.1 million. So I thought that was pretty interesting, and they increased their dividend by 9.6% to 8p. So while there's lots to do, market's uncertain, board now expects that the outturn for the full year will be slightly ahead of previous estimates. So given that everything came off a pretty strong comparable period, that to me looked pretty good, all things considered.
That sounds all right. Yeah. Now we had 3 of our corporates have put out news this week. I wonder if you can get all 3.
Oh, Andrew.
I love doing this.
Thank you for that. Pressure Technologies.
Yep, there's one. Well done.
Infinity Energy Systems.
Yep. Actually, in fairness, you don't research the third, but we do talk about it on here occasionally. It's Aquis had results today.
Yes, and I did read those this morning. Thank you, Andrew. And their profits were up very nicely.
So, well, should we make? Well, so I'll do it. I'll cover them all for you. But in Vinity, obviously, they announced that Hungarian order for 1.5 megawatts at the start of the week. They obviously have got a distribution partner out there who has promised to sell lots and lots and lots of these batteries. I think the news flow coming out of this company is just going to get better and better, hopefully. Pressure Technologies, obviously, unfortunately, we know they're going to be suspended at the end of this month because they haven't got their accounts out quite yet. It's not a problem. The good news was they had a record order, basically for their one of their divisions, which is in their PMC division. Which, I mean, the business, although it's really sad they can't get the accounts out, the business is really going well at the moment. And I think the market's taking it in its stride, luckily. And then Aquis had some very good figures this morning. I don't know if you actually looked at them, but I mean, they were very good figures. Everything is growing beautifully, in truth. Revenue up 24%, profit before tax up 27%, underlying profit up 41%. Obviously, a lot of people forget that, Aquis is more than just the Aquis Stock Exchange. In fact, it's a lot more than that. It's a whole sort of pan-European trading platform. The stock exchange perhaps is the sentiment side of it all, but they are doing things that this country needs, is all I will say.
Including 33 IPOs last year,
which is good. Better than AIM, which
exactly, it was better than AIM. Yeah, there you go.
Go on, that got those out of the way.
I did see the Aquis results this morning. Right, just moving back to a little bit more sector news, and this is on computer gaming. This was interesting. This is Team 17. The ticker is TM17, 586 million market cap. Reporting their full year results, their 5th year, they say, as a listed company, their 8th consecutive years of growth business. And this is the company's computer games, and one of their games, most popular one, is called Worms. And they reported that their revenue, organic like-for-like, they made acquisitions, grew by 3% to 93.2 million. And they gross margins up from 50 to 51%. What we got here, profit before tax was down slightly, 21.9 million, 29.1 million down to 28.7 million, but that included one-off acquisition related fees. Now, the big news on this one was that Debbie Bestwick, the founder and chief exec, is to step down. And she says, ultimately, I want to spend more time with my children, who made sacrifices many times during my career, and specifically spend more time with my youngest before he goes to university. So Debbie Bestwick, the founder, is stepping down from Team 17, and I think that certainly caught the market by surprise. So the shares were impacted. Yeah, this is an interesting situation. I mean, it's obviously got a very good, good board, a huge team behind it. It'll be interesting to see how that evolves and whether that does become, given the impact on the share price, an opportunity to potentially look at. They've certainly got plenty of cash on the balance sheet, so good games franchises.
We love cash.
Yes, we do. And given the funding environment at the moment, yeah, absolutely. And the final one from me was, and this is a company that has gone through a fair bit of restructuring over its time, but it's it's XAAR, XAAR. XAAR is the ticker, 154 million market cap, and they have print head technology for industrial printing. And industrial printing covers, it's quite sophisticated technology, this, because it's inkjet technology, and you have to drop the ink very, very accurately and often at speed on products flying through production lines. And so, there's quite a bit of tech behind this. Their main markets historically were, and I know this, tiling in China. A lot of tiling is printed under on sort of basic ceramics. But increasingly, they've been developing newer tech, and that's used for, coding on what have they got? Different, So coding is used on things like flat panel displays, semiconductors, printed electronics, and optics. So these are it's date code information, so you can trace when the product was manufactured, and its part numbers, all for traceability. So they're getting into those markets, and they said that their sales jumped from 59.3 million to 72.8 million. Gross margins up 34% to 39%, so that's all kind of looking good. But they've been increasing their R&D spend, seeing market opportunity. Their adjusted profits moved from a loss 0.6 million to 2.8 million, and a more or less flat profit per tax. So, looking at this realistically, it's expanding into other markets. It's bringing out new technologies. It's obviously getting a good price for them. It's increasing its gross margins, and it's been investing in R&D. So, and I know this business has been in quite a turnaround since it was sort of dominated by the Chinese tile markets, and those weakened. That is an improving situation, and it has cash of 8.5 million, and it's already and they've invested quite heavily in inventory as well to manage supply chain constraints. So that's nice. I've known this is a company I've known for a good while over the years.
Well, a lot of people have. It's a real recovery stock, isn't it? And it was one everyone was tipping, and it's sort of been on everyone's radar, so to speak. It's had a bit of a short-term recovery. It's sort of now, unfortunately, a little bit struggling to go any further. Not that it's a good company. Don't get me wrong. I just actually I just noticed Schroders own 28.7% of this company. So they clearly believe in it. It's got some other good shareholders actually. For another, Aberforth, Invesco, Threads, J.O. Hambro, River and Mercantile.
Chairman's very good as well. The chairman is Andrew Herbert. He was the former FD of Domino Printing Sciences.
Yeah,
they made print technology, industrial print technology, was sold to Brother in Japan for 1.1 billion.
Anyway, it's had a good jump up from about 175 to 195 just recently. So flat today.
There we are, but not to end on a flat note, of course, Andrew.
Oh no, shall I end it quickly?
Yeah.
I've got about 1 minute. We sometimes talk about brands here, but interesting to see that the Hut Group, there's a sort of a new group that is out and about, trying to stir things up a little bit, isn't there?
Yes, and is it Kelso?
Kelso, yes. Actually, I'll tell you what, it's my old mate Gouldy, and Jamie Brooke is another old mate, and David Charter's another old mate of mine. Actually, I know all of these people. David Charter's written a series of books about the city, which are quite fun. He used to work at Warburg's. But yeah, they're giving the Hut Group a bit of a push, saying you need to change things and get this done and this done and this done. It's still a fairly small little sort of activist vehicle, Kelso. I'm sure it'll try and grow. And the Hut Group is quite a nice high-profile company to have a bash at. I'm not sure if Matt Moulding will really listen to them, but we'll see. But that was there's a nice little note to end on.
Yeah, exactly. Well, I look forward. I don't know. We'll be able to chat next week, Andrew.
Well, I'm down at my house in Cornwall. We'll probably record something. I may just be out on the golf course at some stage. But I will, of course, be out with my son, who runs the Schroders Global Energy Transition Fund. So I dare say our conversation will be about transitional energy all the way around, which is quasi work, isn't it? Look, on that note, we'll call it though. We've done our 30 minutes, so we've probably droned on to some people. As usual, if you've got views, do tell us. We love hearing from people. If you want to pay us money, just pay us lots of money. I'll send you my bank account details. We'll speak next week, Phil. Thanks.
All right. Cheers, Andrew.